82% housing appreciation and 100% chance of a Fed rate cut? Nah, that can't be real, can it? Is it? Let's find out. Let's dive head first into the madness, and we're gonna go quick, so focus in today. Yes, 82% housing appreciation is possible. Take a look. Kalispell, Clewiston, Cedartown, and Edwards, Colorado, all above 80% appreciation since 2020. That is wild, but it doesn't stop there. Jackson, Wyoming, Butte, Montana, Boone, North Carolina, and Statesboro, Georgia, all with massive appreciation since 2020. And you know what's funny about this? We actually talked about this way back in 2020 several times on the show. What do all these cities have in common? Yep, that's right. The great migration away from cities is still underway, although I'm not sure the country folk love it too much. I fished Boone, North Carolina, and it's a beautiful place, but it is out in the middle of nowhere. Another thing we touched on many times, including last week, is the spread between the 10-year and the 30-year. There's another interesting graph showing the current spread, and you can see we still have a pretty big gap that hasn't been seen for many, many years, but the good news is many economists believe that should narrow back down, which will bring mortgage rates back down as well and in line with historic trends. Speaking of rates, believe it or not, traders are now predicting a 100% chance of a Fed rate cut in September. Here's an interesting update to that stat though. 93% chance of a Fed rate cut of a quarter point and a 7% chance of a half point rate cut. That's new. Either way, 100% chance in September. We'll see. Another interesting stat, median purchase price for foreign buyers is much higher than domestic buyers. And we actually feel this in our soul here in Seattle, as many of us locals are being priced out of our communities due to this. We see a ton of foreign cash offers bidding up our homes, and oddly enough, while it doesn't feel like it, here locally, the pace at which these buyers seem to be buying is slowing down. That surprises me, but maybe that's just because we're so close to it, it just doesn't feel that way right now. A concerning trend that is growing sharply, 6.7% of listings had price drops, and that's the highest on record in recent history and something to keep an eye on. I don't love this next stat either. Multifamily housing construction has stalled. This is showing units authorized but not started, down sharply. So our privately owned housing unit starts. We've been on a nice run since 2010, with just a few blips along the way, but as of late, that trend has seemed to reverse. Single-family permits have declined with multifamily permits as well. I'd love to see all those trends reverse though. We need new construction to be booming, not slowing down. Another odd stat that we'll bring you today, this is showing market share of US homes purchased by landlords with 1,000 plus properties. Now this is like the big boys, if you will, down considerably from the highs of 2021 and 2022. I think that's a good thing personally. And finally, we may not necessarily have a refi boom in the works, but they seem to be coming back slowly and demand and applications are increasing. It's a great thing for Americans and the housing and mortgage industry in general. So there you go. A lot going on there. A mix of some great data and some meh data, but overall a pretty good outlook. What's your favorite stat? Share in the comments below and push us out to your entire database. This is super interesting stuff, jam-packed with data versus commentary. We love all the shares. We appreciate it, and we'll see you guys next week.